This is your host, Ian Cox, for another Chat with Traders Community presentation by Sunny Harris. If you'd like to know a little bit more about Sunny, we interviewed her as a main podcast guest back on December 18th, which you can refer to. Sunny, welcome to Chat with Traders Community.
Thank you, Ian.
Yeah. So how many years has it been since you've been first investing or trading?
Trading 42 years.
42 years. So
that's almost how old I
am. All right. Yes. Great. Yeah. You that was back 1981.
1981.
Yeah. To go back in history, if we look at that time, that was a time somewhat similar to this time in the sense that we had high interest rates or rising interest rates, high inflation, and a stock market that what was different about then was that the stock market was actually lower then than it was 26 years earlier. What interested you about stocks, say, instead of real estate or the very high interest rates that bonds were given the stock market's very poor performance over the long term?
Well, I was doing real estate and bonds both, as well as the stock market. Yeah. In fact, I had some high yield municipal bonds, and I had $100,000 in the Whoops power plants, Washington Public Power Supply.
Oh, wow.
And they were yielding 16%, which was really good. So 116 was the coupon, and they went down to $5.
Wow!
Yeah. Oh, almost overnight. The nuclear power plant was having trouble, and they just bottomed. So my stockbroker said, "I think you should sell them." I said, "Why am I going to sell them for $5? That doesn't make any sense. I'm just going to hold them." And they. Over the next year, they not only recovered, but I gained a nice profit out of it.
Wow.
Yeah. So yeah, I'm just doing that too. And stocks.
I see. But what drew you into stocks, given that it had a multi-decade, sideways to grinding bear market? I mean, most of your life, or a good portion of your life, you had been experiencing and seeing, stocks just vastly underperform and just grind their way down. What attracted you back in 1981?
Well, I don't know how to answer that. I didn't notice that it was grinding. And so I was picking a few stocks that I thought had the ability to move and hanging on. Now I wasn't trading them at that point. I guess I was trading, but I would buy them and hold 6 months or a year. And then sell them, and strangely, one of my best performing stocks was Tam Brands, the makers of Tampax. So, and it did really, really well.
So in those early years, were you kind of a fundamental investor? How did you find those particular stocks?
I plotted charts by hand.
You did?
I did. I had graph paper galore, and I would look at the price every morning in the Investors Daily. It wasn't Investors Business Daily yet. And I would read the price for yesterday, and I would chart it on lots and lots of graph paper. So I was charting probably 30 stocks to see what they were doing. And even way back then, I was looking at chart patterns.
Wow. Boy, that's going way back. That's I gather that was fairly time consuming.
Oh yeah. Yeah. There was a Denny's down the street from me, and I would walk down to Denny's every morning with my Investors Daily and plot these charts while I was having breakfast.
Did you get any questions from curious onlookers on what you're doing?
No, I didn't, but it's a lot of people with Wall Street Journal and the Financial Times. And in fact, one morning I sat right next to Willie Nelson.
Oh, wow.
Yeah.
Great. So your first bear market experience from January 81 to June of 82, Did you continue to add more to the market as it continued to fall another 23% over the next 18 months?
I did.
Mm.
I did. I just was of the belief that eventually the market goes up. It always goes up eventually.
Mm-hmm. Mm-hmm. You were pretty brave, I guess, back then compared to so many others.
Or stupid.
Yeah.
I'm not sure which it was.
I imagine
Maybe.
I imagine the psychology of that era was quite negative towards stocks. Did you ever meet a broker urging you not to buy stocks, or was it always a good
Oh
time to
no,
buy in their
brokers.
eyes?
Oh yeah, brokers will always sell you stocks to get their commission. Whether it doesn't matter if you make money or not.
Mm.
They're really there for their commission.
Uh-huh. And how much were they charging for stock commissions back then?
Oh gosh, I don't know. It was a lot.
Uh-huh.
I remember it was a lot. I remember the margin on the S&P better than I remember the stocks.
Oh, I see.
When I started trading the S&P, I was paying $50 a side.
Uh-huh.
So $100 a round turn to trade one S&P contract.
Wow. How often did you experience brokers pushing to sell small or penny stocks, which resulted in greater commissions for them?
Yeah. I encountered it, but I never succumbed. I didn't do penny stocks. Never have.
Mm-hmm, mm-hmm. So when was your first, when did you first use computers to either input chart data or to receive chart data in some form?
1985.
1985. Wow.
Was the beginning of the computerized revolution.
Wow. And
Yeah.
were you able to get on like a bulletin board and download data, or was it still manually entered into this?
Yeah, good question. The first thing I used was CompuTrack, which was originated by Tim Slater. And I used CompuTrack and they had data.
Mm-hmm.
So that was, but it was only daily data. There was nothing intraday at the time. We were using DOS
Mm-hmm.
and it had daily data. So that worked. I was looking at long-term charts anyway, so daily data was fine. I still trade stocks on daily data.
Mm-hmm. What kind of tech did it? Was it able to show any kind of technical information? I mean, did it include volume or anything else that helped you?
Oh yeah, it had volume. It had a few indicators. Wells
Mm-hmm.
Wilder's RSI and MACD was there. Gerald Appel's contribution
Mm-hmm.
and moving averages. There were a few simple things there.
Mm-hmm. Wow. So you did this starting in 1985, right?
Mm-hmm.
How were you positioned in 1987? Especially in the second half of 1987, prior to the stock market crashing. What indicators were you looking at,
I
which
was looking
convinced
at
you?
the yield on the Dow.
The yield on the Dow. Okay.
Yeah, so I was looking at I had heard somewhere that when it got above 6, chances were it was going to crash because you can't stay at 6 forever. It's what the word on the street was then. And
Mm-hmm.
when I saw it go up to that level in August of 87,
Mm-hmm.
I thought, oh boy, we're in for trouble. So in September, I think it was, of 87, I called my stockbroker and said, sell everything that I have. And he said, no, you don't know anything about the stock market. I've been doing this for years
Mm-hmm.
and it's not going to crash. This is the biggest bull run in history. And I said, I don't think so. And it's my money. And so sell everything I have. So I sold out in September.
I see. What could you go over that indicator? You say dividend yield. You mentioned the number 6. What is that? Like what does that represent? And like what was a historical range typically?
3 to 6 typically. So when it was down to 3, we were looking at a down market, and when it was up near 6, then we were looking for a market that was rising too fast.
Oh, a 6. You're saying that's the dividend yield?
Yes.
On the Dow Jones. So wouldn't a high yield indicate lower prices because if the dividend yield is relatively unchanged or relatively fixed, aren't higher yields good in the sense of it, you're buying closer to the bottom?
Well, I don't know that answer.
Oh, okay. Okay. So in any event, you used an indicator like that. So there wasn't any, was there anything in the chart specifically that the shape of the charts or anything that set off alarm bells, or were you just mostly focused in on that kind of indicator and not too much on the technical aspects of the chart?
Well, technically it had reached a high and was starting to pull back.
Mm-hmm,
So,
mm-hmm.
and I don't even have a chart. I don't even have a yearly chart that goes back that far. But, you know, it just looked to me like it was getting weak.
Mm-hmm. So how did the crash of 87 influence your trading style, if at all? You know, position sizing and or types of stocks that you traded?
Well, I was thrilled. I saw it crash like that, and so it crashed 105 points on Friday. It dropped 506 points on Monday, and on Tuesday morning, I called my stockbroker and said, "Buy everything you can get your hands on." And
Mm-hmm.
I was just buying at a good price.
Mm-hmm. Was your goal back then to, you know, hold on to it for a longer period of time?
Yeah.
Because you saw kind of a once in a generational opportunity there?
Mm-hmm.
Mm-hmm.
Exactly.
I see. So after the 87 crash, when you loaded up, uh, did you do much trading then, or was the majority of your portfolio just kind of in buy and hold stocks for the longer term?
Well, it was definitely a buy and hold for the longer term at that point.
Mm-hmm.
And again, you know, longer term to me was a year.
Oh,
So,
okay.
you
Right.
know, so I was buying and holding and buying more that I saw, you know, whenever there was a bargain.
Mm-hmm. Mm-hmm. So how did so from 87 onward, could you share with us the types of you know, charting that you looked at, technical indicators, how the technology progressed over the years, and indicators added? What was that like during the following um, 5 to 10 years after that?
Well, I had access at that point. I had started using what later became TradeStation. It was Omega Research, and they had a lot of indicators in their System Writer program, and that's what I was using, was System Writer. And it was exciting because we had Windows 3 then, and that was a whole new operating system that was more fun than DOS for sure. And I was watching the MACD crossovers combined with the ADX to show me trends.
Mm-hmm.
So I was using those two indicators together.
What is that? Could you tell the listeners, what does ADX and MACD mean?
Okay,
What does it represent?
MACD is moving average convergence divergence, and it's a moving average and then an average of an average. And its crossovers supposedly show you position long or short.
Mm-hmm.
Now, I'm not going to follow a long or short unless the ADX, which shows trends, confirmed that we were in a trend. ADX stands for Average Directional Movement Index. And if it's going up, we're in a trend. Now, it doesn't say whether it's a downtrend or an uptrend. It just says trend. And if the ADX is moving downward, we're not in a trend. So we're in a choppy sideways market. So I wasn't willing to trade during a choppy market. I only traded during a trend, up or down.
I see. Uh,
And I picked that up from a little book that was in a 3-ring binder by Jake Bernstein.
mm-hmm.
He's been writing books forever. He's written something like 40 books or something.
Mm-hmm. Mm-hmm. And how many years did you use the ADX and the MACD?
Oh, I probably used it from 87 or 88, probably 87 to probably for 3 or 4 years.
Mm-hmm, mm-hmm,
Mhm. And then I developed my own dynamic moving average because I didn't like the whipsaw part of the market.
mm-hmm. I see. So you were using, is this daily data on the ADX MACD?
Well, no.
Mm-hmm,
The software only used daily data.
mm-hmm,
But what I did, there's a little company called Tick Data Inc.,
mm-hmm,
and they collected every tick from the market. And they had a little software package that would allow you to massage that tick data into uh, different packets. So I was putting it all into 15-minute increments. So I had 15-minute data, which I imported into System Writer.
mm-hmm.
And System Writer thought it was daily data, but I made a little ruler. I drew out a ruler that measured exactly what the distance between a full day of 15-minute bars would be. And then I put the time increments on there. So I would print out my daily, what it thought was daily data. I'd print that out and take my little ruler and measure the 15-minute increments. And so I was actually trading with intraday data when no one else was.
Oh, wow. That's quite something. Did you find that the daily data didn't provide you with the kind of granularity that you were looking for? Yeah.
And I was trading intraday at that point.
Mm-hmm.
So I had to know what was going on in the middle of the day, not just at the end of the day.
Oh, wow. Wow. So you would get this, I mean, you were able to get intraday data while the market is trading, correct? You were,
Yeah, and I had a program that collected intraday data, but it was for a Macintosh. And
Mhm.
so I had Macintoshes and PCs both. And that company was Robert Slade, and their program was called Master Chartist. And there was a company, still is, called Data Broadcasting, and DBC they go by now. And Data Broadcasting put out intraday data over the airwaves. So I had an enormous TV antenna on the top of, on the roof of my house, and wires running down to my computer to collect this intraday data. And every so often it would quit collecting, and then I would have my kids run up to the roof and turn the antenna until I got data again.
Oh, wow.
Yeah,
Boy, that's a blast from the past
primitive.
there.
That's primitive.
Yeah. Wow. Uh, when were you, so describe how this evolved into you know, you creating your own technical indicators. I mean, you're a programmer, correct?
I am.
Right.
I'm a
And so,
mathematician and a programmer and an author and a web designer, a web programmer, and a photographer.
oh, wow. So when did you first start programming your own custom built technical indicators?
Well, I started just immediately. You could program in CompuTrack, simple things, spreadsheet kinds of things. But I started right away doing that. And then when they got System Writer going, they had a little language that they still call easy language, and it was quite easy. And so I was, I had been a programmer for Lockheed, and so it was, to me, it was simple.
Hmm.
So I started right away programming my own indicators.
I see. And so what did you tweak with that? I mean, like how did you program? What were you looking for?
I was looking, yeah, I was looking for a way to eliminate whipsaw. And it took me 18 months of programming and research to figure out those equations. So, so I have some special ingredients that are proprietary
Mhm.
that cause my moving average, my dynamic moving average, to get out of the way when the market's choppy, it gets wider, and when the market's trending, it gets closer together.
Mhm.
So if we have chop, then the dynamic moving average doesn't give you a signal.
Hmm. I imagine there's other traders out there that have the same kind of problem that you've had with this choppiness,
Mhm.
using these custom, these off-the-shelf technical indicators. Uh, did you ever encounter any other technical indicators that's been released over the last 10 or 15 years that attempted to address this issue?
Yes, Perry Kaufman has one that's called KAMA, comma,
Mm-hmm.
and it's called his adaptive moving average.
Mm-hmm.
And who else has one? There's an adaptive moving average in TradeStation. And
Mm-hmm.
between you, me, and the fence post, they don't work.
Oh.
They don't work. It's a good attempt, but it doesn't quite do what mine does.
Mm-hmm. So can you dive into sharing with us what does your technical indicators do?
Well, mine's just it's dynamic in that, and I call it dynamic because it calculates its own inputs with every tick of the market.
Mm-hmm.
So instead of having, like, a standard moving average will have an inputs of 9 and 18 or 10 and 20 or something like that. And then in order to get a strategy that works, you have to optimize these inputs and come up with something that fits the current market conditions. Now, the problem with doing optimizing is you curve fit. And when you curve fit, it's not likely to work into the future.
Why is that?
The market doesn't do the same thing all the time. It's
Mm-hmm.
human emotions and it's fear and greed that are operating. And well, we saw that yesterday with the Fed announcement. The market went straight up and then straight down and then straight back up again.
Mm-hmm.
And that's it, both fear and greed in action there in about 15 minutes. So it was a pretty wild day. But mine, instead of having these inputs that you can optimize, it doesn't have inputs. It has, I use 8 and 13 as seed values, but then the inputs are automatically and dynamically calculated internally for every tick of the market. So it's constantly changing its inputs.
Mm-hmm. Do you have any slides or any graphs of any kind that you might be able to share with us so we can see visually what you're...
Yes, I sure do. Shall I share?
Yes, please.
Okay, just monitor number 3. Now this isn't there you go. It isn't the way I would normally do a presentation because I've got all the slides on the left and I'm picking and choosing, but
Mm-hmm.
the gold and purple lines you see here are the dynamic moving average.
Mm-hmm.
And look through here on the left, how it comes down and they just stay together, stay together, stay together. And then they get wider apart right in here where it's choppy.
Mm-hmm.
I was referring to them moving out of the way.
Mm-hmm.
So it gets wider apart there during this choppy period, and it is moving a little bit wider, you can see, during this choppy period. And finally, it turns the corner and crosses over. Now that's really cool, except it's late. You can see when right here's the crossover.
Mm-hmm.
And I've already had a whole bunch of market movement before that crossover.
Right.
So about 3 years of working with this dynamic moving average, I thought there's got to be something else that I'm not seeing where I can pinpoint the turns. So that's when I developed my Sunny Bands indicator.
Mm-hmm.
Because I wanted earlier entries than that.
I see. Well, can you show us a chart of what it looks like with your new...
With the Sunny Bands on it?
Yeah. Mm-hmm.
I think I can. Let's see. We'll have to search through and find one. There we go. So this, again, has the gold and purple lines in the center. You can see the dynamic moving average there going, back and forth. And then the Sunny Bands are the dark green lines, the thicker lines on the top and bottom. And then the inner band. So I've got an upper outer band and an upper inner band is kind of a bluish teal color.
Mm-hmm.
And again, we've got the lower outer band, which is green down here. And the teal line is the lower inner band. So we've got LOB, LIB, that kind of thing, upper and lower bands. And you'll see here that the way I read it is so we have blue going up, touches the bands, turns red. That's my short signal. So we go down, down, down. Right here, we've got a red bar and another and a doji bar and another red bar with a blue candle going up out of the, so we touched the lower band and then we moved off of it. That's a buy signal. Again, down here, red going down, blue bar going up, and there's another buy signal.
Notice, so this is measured on the Dow Jones Industrial Average.
Mhm.
How well does this work with individual stocks?
It works on any symbol, any time frame. So this happens to be a daily time frame, but I use it on 1 minute and 5 minute charts of the E-mini. I use it on Tesla on daily charts. I trade stocks on daily charts, and I trade the E-mini on 1 and 5 minute charts.
I see. And using this system, what have you found the average win rate, a percentage of trades that are profitable?
I don't know. I haven't ever kept track of that.
Oh, okay.
I just look at what's in my account, and I call it scraping the account. I know how much I need to leave in there to cover my margin. I double that, and then I take out whatever is left over and put it in the bank.
Great.
And I haven't calculated the statistics at all.
First, I'd like to open it up for any questions from the audience.
No, that's a good idea.
So you mentioned the PAL speech yesterday. Did you trade that, and how did that go for you?
No, I did not trade it. I have a live trading room every Tuesday morning, and the market was just so narrow and choppy. It was worthless. I mean, I managed to pull $88 out of it, and I was happy. But I said to the live trading room before we ended at 8 o'clock, Powell's going to say something, and the market's going to go one way or the other violently and then back the other direction. So watch out for it. So I did not trade it. It was way too risky.
So you tend to avoid the volatility events, and you're more of a steady trader?
Yeah. And I don't like to trade the open either for the same reason. So I don't trade before 7 a.m. And I'm in California, if you couldn't figure that out. 7 a.m.
How long is your typical hold period for these type of trades?
Anything from a few minutes to, I don't typically hold, more than 45 minutes to an hour. That's a long-term trade.
Wow. Yeah. Wow. But so looking, do you have a chart that can show us like an intraday action that where you could show us like, okay, for example, I got in here, or here's what where I would get in, and here's where I would sell?
Sure. Let me share a different screen with you. I'll share my trading screen. That's number 5. I have 5 monitors. So this is the screen that I use to trade on. And this is the yellow one's a 1 minute chart. The green one's my 5 minute chart. And then I've got a long-term chart over here, a 15-minute chart. And the trade, and I watch the 5 minute for all the signals. So the trade on the 5 minutes, you can see that, and I have different colored bars. The blue and red candles are for the day session. And I color the night session green and magenta, so I can real quickly identify which is which here. And do I have Fibonacci lines on there, or just, I call horizontal lines, no, I don't call them support and resistance, I call them attractors. And the same thing, the sunny bands are attractors because they attract price to them. And moving averages are attractors.
I see. So
lines. Here's Fibonacci lines on the 15-minute chart. You can see I measured the Fed movement yesterday, put fib lines on there, and look, it went right to this line today.
Wow.
So the trade there is to ignore all this. And you see that this goes down, touches the fib line, and doesn't quite get to the outer band, but that's a long trade right there, even during the Fed movement, and then there's nothing to do. But you can see back over here, same thing. It's 6:30 in the morning to 7 is awful. And then it settles down and starts doing something. So there's a long trade right there. That's day before yesterday. And then a short into this.
I see. How about right now, looking at the ES, it appears it's bounced off the lower dark green line and
It has,
appears
and
to
that's a long
be,
signal right there.
that's a long signal right there. I see.
Uh-huh.
And then you're looking to, so if you weren't talking to us, would you have likely gone long there?
I would have.
Okay.
I
And then
would've.
what target are you looking for to get out?
Okay, I'm looking for two things. The basic rules are to look for it to go from extreme to extreme, outer band to outer band.
Mhm.
But I can see right here that this dynamic moving average is starting to flatten out.
Mhm.
When it's flat, that means less than an absolute value of 5 degrees. So it can be 5 degrees up or 5 degrees down, as long as it's in that range, from there to 0 in that range,
Mhm.
then I call it flat. So when it's flat, I only expect price to go just to the DMA.
Mhm.
When it's trending, I mean, when it's moving down like it was here or up like it was over here, then you stay with the trend until it's over. But when it's flat, it's dangerous.
Uh-huh.
A
So
flat DMA is danger, danger.
danger for the trend. I mean, in other words, the bounce
Mhm.
is likely to be very short-lived up to
Correct.
that
Correct.
brown line. Yeah,
Mhm.
I see. Can
And
we
look, there's a fib line right where that DMA is going to be in a few minutes.
uh-huh.
And that's 38.2%.
Mm-hmm. Where would you go short in this scenario? Like what setup would attract you to go short?
I will go short if it does not break the DMA. It'll turn around and go back down when it's flat.
Mm-hmm.
But then I have to know that the range is likely to be just from the DMA, which is at 41.46, down to the lower outer band at 41.24. So we've got, 15 points to work with there.
Mm-hmm.
So it could easily do that, and that's where I would get out again.
Mm-hmm.
If it breaks above the flat DMA, then it's going to go on up to either the inner band or the outer band on the top.
Mm-hmm. Can we enter in another ticker symbol for people to see
Sure.
some
What do you
stocks?
want to see?
I don't know when we put in Tesla. If anyone has a ticker symbol that you'd like to have pulled up,
Hey,
please enter it in
This
the
is
chat.
why I don't trade Tesla on a 15-minute chart. So let's change
Oh.
it to daily where we can see what I actually do. Okay. And there's Tesla.
Mm-hmm.
And look over here what the flat DMA did. Price went up to it and back down, up to it and back down, up to it and back down, and then finally broke out and went long.
Mm-hmm.
Yeah.
And you don't trade 15-minute on a stock like Tesla just because
because the charts look better and I like to hold stocks longer term.
Mm-hmm.
So the
I see.
longer term you want to be, I mean, if you wanted to be really long term, like say with bonds or something, you trade it on a weekly chart.
Mm-hmm.
You want to see bonds?
Yeah, sure.
Let's do at US. So it's just sideways as can be right here. The DMA is flat, price is flat. Price has touched the upper outer band and now is probably going to drop to the lower outer band.
Mm-hmm. I see. So neutral to bearish, slightly bearish
Exactly.
position on this.
And I mentioned attractors. Let's draw an attractor here. Horizontal line. Right there's an attractor. And you'll notice that it hits price here. That's where I drew it.
Mm-hmm.
Price hits it here. If you look back, it hits it here again. And right there, the wick on that candle touched it. So that's what I call a strong attractor because it's been tested many times.
Mm-hmm. Question from the audience about Uber. If you could pull up
Uber.
Yeah.
Is that it? UBER?
UBER.
There you go.
Okay,
Let's
so
put a tractor on this. And I'm going to pull it from this line right here, this bottom, because I see it hits it over and over and over again. And now it's going up. Oh, this is a week. No, that's a daily chart. Okay.
Mm-hmm. So could we zoom in to this chart and see? It looks like the time it gave a bullish signal right
Down
around
here.
the very beginning of January, right? Or late December?
Late December.
So the bullish signal is when it crosses it looks like the light blue line, dark blue line from the bottom, the second line from the bottom.
It's when it comes down on red candles and goes back up on blue. Then I wait for price to confirm that that's the direction it's actually going. So I would have held long from here all the way across this awful stuff. And we've got a flat DMA, and look, it even breaks it on a gap. Okay, so we're still long, still long, still long, still long, and still long. Now we've got a red candle up at the top. We had a blue candle. Now we've got a red candle, this is kind of an anomaly. I don't know that I've seen this before. It went straight up above the outer band, and now it's coming back down. I don't take that as a sell signal yet until price action on the next bar confirms it.
I see. So to you, does this chart look overextended, but not yet ready to sell or go short?
Well, maybe. I've got on the bottom down here, this little indicator is called who's on top with the dots. They're gold the whole time, which tells me the gold line is on top, and there's words out here that say gold on top. So as long as the gold is on top and we are at the upper band, it could go on for a long time still.
I see. So this reminds me of the relative strength indicator that even though it's overextended, it can just keep on going up and up and up, even though it's pegged, above 80, right?
That's true. It
I
can go
see.
for a long time.
What now? This is a daily chart. What about, say, a 30-minute chart or 1-hour chart? How often can we go into here to get earlier indicators, as it looks like it's broken down below the top end of the range?
So on the 60-minute, we've got green candles going up, a red candle coming back down, confirmed by price here. So that's a short signal on a 60-minute. On the daily, this is just one bar.
Oh, right. That's just one bar. So based on what you see here, does this look like at the current time, a long, a short, stay out, wait for more information?
Well, the dynamic moving average is flat, and flat is danger. So we don't know what to do until the next bar, where it's either going to go up above, down below, or just sit here and churn.
I see. So the dynamic moving average, it's currently flat. So that's sort of like a wait for more information before taking a position. I see.
I sometimes call it a do nothing signal. Sometimes the best thing you can do as a trader is nothing.
I see. I mean, this is an hour chart? I mean, I imagine if we went to 15-minute or 30-minute, couldn't we just get another signal that says, oh, look, in this time frame, it says buy or sell?
Well, here's the 15-minute. We've got the bars going down to the outer band. Blue coming back up. That's a long signal. The DMA is flat. We take profits at the flat DMA. So again, I have to wait for more information. If it gaps up or jumps up above the DMA, then that's more long.
I see. So in this case, even though the time frame is shorter, the DMA is very similar
Same as on the daily.
Right. So is that by design, or is that just happens to be this stock in this particular?
It's just happenstance.
Okay.
I do like it when they confirm each other, though.
Okay, great. Thanks. Any other questions or stocks anyone wants to have a look at? Google.
1 minute. I don't trade stocks on intraday charts, and they don't look very good usually, but Google.
Okay, so your intraday, you're focused on ES, and then stocks you swing?
Yes.
Okay.
Yes. So here's a 1 minute Google. the nighttime bar came down and touched the lower band, the green goes up. It's a false signal. We get a losing trade here as this comes back down below, and we go short down to here. Here we're going long to the DMA and back down, long to the DMA and back down, long just above the DMA and back down. So there's lots of long and short signals here. But the best signal is to be short from back here on a 1 minute chart and just hold on till down in here somewhere. And
Yeah,
then
I hit the entry, not the hold it down here somewhere. I got out close to 100 today for that psychological.
Fantastic.
But it's fascinating because you seem to be, you don't trade breakouts in, you're just a range trader.
Correct.
Smart.
When you're doing it right, trading's boring. When you're doing it wrong, it gets real exciting because losses are very exciting.
I see. So breakout. So when you encounter, if you were to encounter a stock that was having a breakout or breakdown, do you stay away?
Well, my breakouts, if you'll notice, are from, it's like a counter trend. So this is going down on red. We've got a blue going up. So the breakout is from the bottom band, not from the top band.
Mm-hmm.
You know, normally you'd say a breakout would be something above the moving average or above the current channel. No, I'm looking for it below the current channel.
Oh, I see. Okay. Great. Is there anything else you'd like to share about your system?
Yeah, be really careful. You can and will lose money trading. It's part of the business. So you only risk money you can afford to lose.
Do you tend to focus in on the S&P or the ES because of liquidity and lack of big gap ups or gap downs, or is that?
Yeah, absolutely. It's the most liquid contract in the world. Yeah, I don't have any trouble getting in and getting out without split fills. You know, I don't like to trade something. If I buy 100 shares of it, I get some at 100 and some at 101 and some at 103. You know, I don't like that. So it just is more comfortable for me to trade the E-mini. I mean, I used to trade the big boy back when it was $50,000 margin for one contract and $50 aside to trade it. And then they came up with the E-mini. I didn't trade that right in the beginning because I didn't know how it was going to work. So I watched that and then I thought, well, this is pretty cool. I think I'll trade the E-mini now.
I just think it's so amazing, Sonny, that you said you've been using the same system and process for
36
30
years.
years.
36.
Wow.
So it took me 6 years of trading all kinds of other ways to get to the point that I've developed this. And I haven't changed anything. I haven't optimized it. I haven't changed the parameters, nothing. I've changed the colors over time and made it easier to read. And I've got a little, you can click on analysis commentary, click a bar. Oh, I have to have this equal to true. Give me 1 second here. Here, drawing. Excuse me, we've got technical difficulties here. Okay, so we have to go down to the bottom of the inputs and change these to true. And it'll show us the commentary, which is a fun little thing I programmed last year. So now we'll go back to the commentary icon and we'll click here. And it gets rid of the bars up to that, after that point. And here's the commentary window. And you can see that it gives me current open, high, low, close, previous open, high, low, close. Here's the current close, the range, the values for the upper inner band, upper outer band, lower inner band, lower outer band. The midline value, which is the black line between the two, the gold and purple, it's an average. The mid angle, which you can see is less than the absolute value of 5. It's only a half a degree. It tells me where the gold and purple lines are, and you notice the colors are matching the color of the indicator itself. So the diff inner tells me there's only 43 cents between inner bands. So now I have a target for profit because I know that's only 43 cents there. If it goes from outer to outer, there's only 70 cents. So that's a cute little feature that I added this year.
Mm-hmm. I see. So that's an easy way to quantify what is shown visually, but maybe more difficult to see visually.
Mm-hmm.
Right.
And I use this in my weekly Sunny Side of the Street newsletter.
Mm-hmm.
So I analyze the sunny bands in the DMA on 15 different markets in this newsletter.
Oh, great. Quick question about the histogram there at the bottom, where it transitions from green to looks like a light, to gold, right? Mm-hmm. So what does that mean when the gold transitions into red as far as the trend, right? It has something to do with the trend there? It's showing the trend is weakening, or?
It's the difference between the gold and purple DMA lines. So back here, when the purple, see, this means purple's on top when it's got purple lines. Mm-hmm. When it turns green, and you see that there's a sunny bands bisignal there, and there's a green echoing it. So that's my confirmation. Mm-hmm. So the green is the confirmation to go long. We go gold, gold, gold. Red is my get out. When gold's on top, going, and when it turns red, I'm out.
Okay, first red bar, and then you're out. Mm-hmm. Mm-hmm.
And this who's on top, the dots at the bottom, you'll see they're gold dots over here. Mm-hmm. And then there's light purple and dark purple. The light purple tells me purple's on top, but it's flat. So light purple says flat, yellow or light gold says flat. So these are the only things I have on my chart. This and the quick trade box.
Okay, great. Thanks for sharing. Any other questions from the audience?
Do you tend to take every signal that your method generates, or do you find that you pick and choose sometimes?
I pick and choose if the DMA is flat. If the DMA is trending, I'll take the trade. But if it's flat, that's the danger signal. And I often won't take those trades that look like they're only going to go up to the DMA.
And you don't have this automated at all, correct?
I'm working on it. I am working on it. But I have to finish my current book. I have to finish editing it and I get it published. Once that's out, I'll be working full time on the automated strategy.
I admire your entrepreneurship and how much work you put in this. You're probably my new favorite trader.
Thank you.
Yes.
Thank you. That's very sweet.
Do you feel like you've ever went through a period of burnout being in the industry for so long and thought about doing anything else?
No, absolutely not. I love trading. I love programming about trading. I love writing. This is my 7th book. So I love writing the books. I love talking to other traders. Give me a call. We'll chat.
Can you remind us, what was the book? What's the book that you're writing?
Oh, it's got a long title. It's the Definitive Guide to Trade Stations, Easy Language, and OOEL Programming.
I remember that.
Yeah, you'll remember that. Yeah, it's OOEL programming. It's the complex programming language that's in TradeStation. And there's no documentation to speak of. There's no way to really learn it unless you're already a born programmer and speak assembly language or something. So I decided to write the book and make it clear so people can actually use it. And I didn't know how to program it in the beginning. So I contacted my friend Sam Tennis and I said, how'd you like to write a book together? He said, oh, sure. Would you like to know what it's about? And he said, oh, sure. So I told him what I wanted to do. I wanted to write a book on object-oriented easy language. And he said, that sounds fun. I said, there's one caveat. You have to teach me OOEL first. So I had him teach me, and I wrote notes copious notes while I was learning, so I could then go back to those and teach people what I didn't know.
Wow.
So that's what the book's about.
You are amazing.
Thank you, Tessa.
Great. Thanks for sharing. Is there anything else you'd like to share with us, Sunny?
I'm going to give you my phone number so that if you'd like to have a free trial of Sunny Bands, you just text Sunny Bands to my phone number, my cell phone, and I'll get in touch with you and we'll set up a free trial. It's 760 California, 760-908-3070. And I welcome phone calls. I love to talk to, especially new traders or struggling traders. But it's good to share stories because trading's a lonely business.
Yes.
Yeah.
Yes, it is.
Mm-hmm.
Great. Thanks for sharing, Sunny, having you on Chat with Traders Community. So thank you for coming on the show.
Absolutely.
Mhm.
I've enjoyed it. Thank you.